In 2017, a specific pattern in XRP's chart turned every $1,000 into $70,000. After analyzing thousands of charts, I'm seeing this exact pattern forming again. The question is, will history repeat itself? As a technical analyst with half a decade of experience in trading stocks, I focus purely on price, action, and volume. It's exactly how I spotted winners like NVIDIA's 200% move this year, Appfolio's 300% move this year, and Com's 170% earnings move. If you want to learn exactly how I analyze these patterns before they explode, grab my free trading systems through the Profit Punch newsletter link below. You'll get both my investors pattern playbook and swing traders gap up strategy that recently caught Com's 170% move in just 5 weeks. I also spend over 20 hours of research each week trying to find these setups so that I can bring you the best opportunities. So if you find value in this video, please hit that like button and subscribe to the channel. It helps me continue creating this in-depth research. Now let's dive into what's happening with XRP. Here's a chart of XRP. As investors, we always want to be looking at the weekly chart, which shows us the long-term trends. There I have my 10-week and 30-week moving averages. And then we also look at the daily chart, which shows us exactly where to enter. On the daily chart, I added 20-day exponential moving average and a 50-day simple moving average. But to understand what is likely to happen in the future of this XRP, let's first understand what happened before. If we go back to this 2017 chart, we can see a huge move, which did 70,000%. If you put in $1,000, you would have ended up with $70,000. You could go buy a house with that. Are you kidding me? That is a lot of money. But understanding this historical move is what is likely going to help us understand what is happening in the future. The first thing we can see is that it broke out to all-time highs. I always say this on my channel, all-time highs. You always want all-time highs because when a commodity or a security goes to all-time highs, there is nobody who is angry that is looking to dump the shares. Everybody is now mostly a buyer, right? That normally pushes the stock up because there's no resistance. And when it's a bubble like this, that's just a concoction for a very huge move. And these moves are very hard to catch as a trader. Most likely you need to be a long-term holder to get such moves, because as a trader, you're going to be most likely whipsawed out from these fake outs that we see. The fake out is when the candle has a long wick like this and then the price comes back up. Normally what happens is that whales who are trying to get into this coin, what they'll do is that they'll push the stock down so that they get all of the weak hands out, which are the retailers. And after that, they're able to buy the stock at very cheap. So you see, as an investor, you most likely bought here and did a 70,000% return. But those whales, they pushed the price down back here, and for them, they could have gotten a 100,000% return. So that means that their money was multiplied times 1,000. If they put in 100,000, it was multiplied times 1,000 to turn into $100 million. That is what these whales can do when they push the price down. But this is also a very good sign for investors. Whenever you see such long wicks and these fake outs, look to get into that, because that is just a sign of people trying to shake people out, right? That's the first thing that you know. So all-time highs, shakeouts, those are good signs. What is another good sign? Breakouts on huge volumes. I color code my bars. Whenever I see a green bar on my weekly chart, that means that volume was really high. Breakouts on huge volume are also a very good sign. So here we have 3 good signs: shakeouts, breakouts on big volumes, and all-time highs. And this is going to help you understand the future, which we're going to see. And whenever stocks move to all-time highs like this, a lot of things normally happen. First, there are 2 things you can expect to see on a weekly chart. You want to see a base that pulls it back to the 10-week simple moving average or the 50-day simple moving average. These pullbacks to the 10-week simple moving average or the 50-day simple moving average are points where you can look to add to your position or initiate a new position. If you want to add a new position, you always want to see at least a base that takes at least 4 weeks. If you want to add to your position that you already have, 2 to 3 weeks, consolidation is okay. And then once it breaks above the highs, you can add to your position. So you see it breaks out, forms this consolidation. I'll show it to you how it would look like on a daily chart. Here, our daily chart, we get that. So you see how it would look like on a daily chart. We see it here, very tight price action. You can see that on a weekly chart, you can see that on a daily chart. Tight price action with very low volume. That is a very good sign, means people are not looking to sell this thing, right? This was the first buy, comes up here, forms this consolidation, we can buy again. If you had a 10% position here, you can double your position here, and then you would make a very huge return. After that, it forms a very long base, a base that is not deep, and then breaks out to all-time highs again. And then we see another buy point here. It breaks out on huge volume. We can see these green candles, right? These are not adding points for an investor because they don't take several weeks. These are just days. You want to see it on a weekly chart, but it doesn't form another base. It just crashes again. This kind of follows Bitcoin's move of that year. So in the past, we can see two very big moves that someone could have profited from. There's the first move, which goes up 7,000%, and then there's a second move, which did about 1,200%. And then both of these moves did a combined around 60 to 70,000%, depending on how you see it. Now, let's see what can happen in the future, because these moves are just repetitions of the past. Of course, the future is not going to be exactly the same, but it will always rhyme the past. What does this look like? Does it not look like this big base over here? What you want to know is that these smaller coins, they always follow the primary market. What is the primary market? The primary market is Bitcoin. Whenever Bitcoin moves, you can expect these smaller coins to move. That's how you could have known that this thing was going to break out. Of course, I wouldn't have bought this thing because it took long to break out after Bitcoin, but we don't mind that because we know that another opportunity is going to come so that we can enter this thing. We can see it going to all-time highs. That is a very good sign. We can see these green bars. So there is volume. That is a second good sign that we saw here before. So what are we looking for now? Since I showed you the past, the primary market has moved because industries move in groups. So you always want to be following the top 5 biggest cryptos. And if you look at them, Bitcoin already broke out all-time highs. Ethereum is looking to break out all-time highs, but it has a constructive pattern. Binance broke out all-time highs. Solana broke out all-time highs, right? Now, XRP also just broke out. They always move together. And the leading ones are Bitcoin, Solana. Those are the leading ones currently this year. They move first, and then we can know that something else is going to move. That's when you can go into these lesser, should I say, speculative moves, and then you can look to profit from them. So what do we expect from the future move here in this cryptocurrency? Like I told you, we are waiting for a pullback to the 50-day simple moving average because right now it's overextended for any investor, right? And we can see that even in the past, there was still a chance to get in. You feel like maybe you missed it down here, but even from up here to the peak, there was still an 8,000% move. So there was still a big room for movement. That is something we are waiting for. So if you don't have a position in this thing, do not initiate a new position. If you have a position, just keep holding it, wait for a pullback to the 50-day simple moving average. If it fails on the 50-day simple moving average and closes under it for an extended period of time, let me say 3 days, you can look to sell and get out. That means it's likely not to move up. But if it recovers immediately, you can always get into it again, and then you can ride the thing up. You can look to add to your position once it does that pullback. We want that pullback to be at least 4 weeks. Or something it could do is form 3 tight weeks or tight week price action like we saw before. The tight price action here in the past that I was trying to show you. You see this tight price action, right? So we see a checkout. That's a good sign. Remember checkouts, they try and check out weekends. Tight price action, that means nobody's selling. People are not willing to give their shares away. So what happens whenever someone wants to come get in? It will just move up. And that's exactly what happened here. That is something which you could see here. We want to see checkouts. Checkouts are a good thing, right? They scare a lot of investors, but don't get scared by these checkouts. So if a checkout happens and it recovers, you will know that is a good sign. If it forms tight price action, that is a good sign. As soon as it breaks out, you can add to your position or initiate a new position. That is something we can expect from XRP coin in the future. If you don't have a position, don't buy. If you have a position, hold it. As an investor, the only person who can profit from this right now is day traders. As investors, this is overextended, right? Yeah, wait for that pullback. Then you can initiate a new position if you missed this breakout. Or if you already have the thing, you can just add to your position already. So I hope that helped you understand what to do with XRP. Once these things happen, watch out for the checkouts, watch out for the tight price actions, watch out for the new bases that are likely to form, and also, of course, watch out for the downside. If it closes under the 50-day simple moving average on huge volume or it's crashing, I will, of course, release a video telling you exactly when to exit these things. So I hope you liked this video. If you found value, please subscribe to the channel, hit that like button, and may the markets be with you.